everyone, I'm Gurleen. I hope you're doing well. In today's video, we'll be discussing the trade plan for tomorrow, that is March 28th, 2023 for Nifty and Bank Nifty, and a few select stocks which must be on your watch list. So stay tuned and don't forget to hit the like and subscribe button and do ring the notification bell so that you never miss an update. So the market failed to hold on to the intraday recovery and closed on a fairly flat note. So what's the way ahead? Let's take a look at the technical angle, starting with Nifty 50. So here on the daily chart of Nifty 50, you can see that the index has registered a doji candlestick, which signifies indecision. And Nifty traded within the range of the candlestick registered on Friday, the high and low of which is pegged at the levels of 17,109 and 16,917 respectively. And as I've been outlining, how this slow grind from this harmonic level looks exhaustive in nature, and it was followed by selling pressure. Now you can mark the levels of 17,109 and 16,917 on your chart, as such a narrow range is generally followed by an explosive move on either side, and it gives you a flexibility to punch a trade in the direction of the breakout or the breakdown. Also, on the higher degree, Nifty is still trading within this wide range of 17,200 and 16,800. So what can happen over the course of the week? Let's take a look at the hourly time frame to understand the setup. Now here you can see that we have a major horizontal support at the levels of 16,800, and it has been over a week that the index is consolidating within this range with a lot of erratic and volatile moves on both sides. Also, if you remember, we talked in the last video about not taking any impulsive long bets as Nifty had been continuously facing supply pressure at this zone of 17,170 to 17,200, and positive momentum will only come in above this zone. Also, this harmonic pattern was yet to be triggered, though it's not invalidated yet, but with a broader weakness, it's only a matter of time that Nifty tests the lows once again. We also discussed the possibility of a pullback, and in that case, the hourly averages were to be considered as the immediate resistances, which you can see here that Nifty did try to move on the higher side, but constant rejection was coming in from the hourly averages, and you can also observe the volatility from the wicks itself. So the bottom line is that more or less the index has been sideways, with the volatility remaining elevated, and a potential downside would open up below this low of 16,828, which would also invalidate this harmonic pattern. And in that case, the index can test the levels of about 16,650 on an initial basis. Now, on the 15-minute chart, a potential harmonic pattern got triggered below the level of 17,045, and I was expecting it to test the levels of about 16,960 to 16,871 on the downside, and you can see that we saw a short-lived bounce or a pullback from this wide harmonic potential reversal zone, and we estimated this in the last video as well. Now there's an overall declining structure, and a break below this recent low of 16,917 would trigger a move on the downside in sync with the breakdown of the range on the daily time frame as well. And in that case, we can expect the index to test the levels of about 16,871 to 16,828 on the downside. Now, on the larger scale, the support for Nifty is placed at 16,871 and 16,828, whereas the resistance is placed at 17,092 and 17,200. Now let's move to Bank Nifty. So here on the daily chart of Bank Nifty, we saw selling pressure coming in from the 20 DEMA, which also coincided with the hourly harmonic level of 40,268, and Bank Nifty had logged a long upper wick, which meant that the price was not able to sustain at the higher levels and closed at the lows of the day. Thereafter, we saw a follow-through selling majorly because of the negative sentiment floating around banks over the weekend, and today Bank Nifty traded within the range of the candlestick that was registered in Friday's trading session. Now, a clear indication of the upcoming trend will be a breakout of the high, which is at the levels of 39,767, or a breakdown of the low, which is at 39,294. Now let's outline the possibilities. Well, in case of a breakout at this level of 39,767, the maximum upside looks capped at the levels of about 40,000. But what about the worst? Now you can see that the maximum downside levels for Bank Nifty are placed at 38,157 and 37,838, and an additional confirmation for the downside opening up would be the breakdown of the recent low of 38,613. So we can say that until the level of 38,613 is held, we are on the safe side. In the last video, we discussed that the hourly averages can be taken as the immediate resistances, and here you can see a long upper wick, which simply means that the price did break through this average, but only to trap the market participants. Now in the upcoming trading sessions as well, you can still go on with these levels of 39,542 and 39,602 as the immediate resistance levels on the upside. On the 15 minutes chart, after the breakdown of this structure, I was anticipating a downside of about 39,360 to 39,145, and we discussed that we may see some respite from these very levels on an intraday basis. So the recovery did come, but it was followed by selling pressure towards the end of the day. So can Bank Nifty inch lower towards the levels of 39,145? Very much so. Now we have a declining structure, and with the breakdown of this horizontal level or the low of 39,294, the possibility of testing this downside level would open up, and also the intraday advances towards the moving averages over here cannot be ruled out. Now for your reference, I have written the support and resistance levels for Bank Nifty. So support is placed at 39,145 and 38,795, whereas the resistance is placed at 39,768 followed by 40,000. Now let's move to stocks, starting with HDFC Bank. In the last video, we discussed that a shorting opportunity might be brewing up in HDFC Bank, but it will only get triggered below this pivot of 1555. And HDFC Bank protected this pivot, and the harmonic pattern that we were referring to got invalidated because of intraday volatility. So we'll not be considering this pattern any further. Now on the daily scale, HDFC Bank is trading close to the 20 DEMA and the breakdown level of 1582. Now it's moving within a narrow range, and it might continue to do so, and a bearish sign would only be a breakdown of this pivot at 1555, and in that case HDFC Bank can be seen at the levels of about 1540 initially. The next one is ICICI Bank. So as we discussed in the last video, that ICICI Bank reversed from the harmonic potential reversal zone, and another short opportunity was brewing up over here. So here ICICI Bank broke below this pivot of 849.15, and this harmonic pattern has been triggered. Now, a potential downside of about 830 can be seen over here with an invalidation level of 860. Now moving to Reliance. Well, I've been getting a lot of queries that is a double bottom brewing up in Reliance? Well, maybe or maybe not, because the first conclusive sign of a double bottom is the breakout of the neckline, which hasn't been the case in Reliance. And Reliance is also trading below the key averages. So we'll not try to jump to conclusions here, but wait for the setup to be triggered. Also, as of now, it is trading within this wide range. And if you remember, we did catch a reversal trade here from the harmonic level of 2187, and you can consider this very level as the immediate support in Reliance for now. Let's also take a look at Godrej Consumer on the weekly time frame. So the stock is trading within a narrow range just near the previous highs and is also placed above pivot P. So in case of a sustained weekly breakout of this range, the upside looks capped at point D, which is placed at the levels of 1083.50, which happens to be a harmonic PRZ, and the stops can be placed at the lower end of this range. So on that note, it's Gurleen signing off. Until we meet again, have a good time.